But let's move on. Bhanu Chopra is the founder MD at RateGain Travel Technologies here, joining in on the show. Thank you so much for taking time out. I want to start off with that QIP, 600 crores closed. What about the utilization?
So yeah, the QIP was specifically to build a war chest for our inorganic growth strategy. So as you're aware, our space is extremely fragmented, and RateGain's successfully completed a number of acquisitions, including the recent one, Adara, which was extremely fruitful for us and helping us realize our vision of building an integrated tech stack that allows our customers to acquire guests, retain and engage them, and have a wallet share expansion. So given the fragmented nature of the industry, and everything that we see sort of in our overall product strategy that fits our product strategy, those are the kind of companies that we're looking for. So we wanted to build this war chest to really go after some of these opportunities. As you're aware, the company is organically growing really, really fast. We're now run rating at 200 crore EBITDA, and with this QIP would be sitting at about 1,050 crores. It's a good war chest for us to pursue some of these strategic growth options.
You also plan to focus a lot on AI, on tech. How important do you think it is to leverage technology for the company? And in addition, you have a robust free cash flow. So is there anything on the radar for M&A?
Yeah, so we are a digital first company. We basically provide technology or SaaS solutions to the worldwide travel and hospitality industry. So we've been at the forefront of generative AI and AI in general for almost a decade now. Our product Rev AI is built on basically AI models that makes recommendations on how you price for car rental companies. So basis demand and supply, we adjust the price recommendations on behalf of our customers and completely automated. And as I stated earlier to your other question about M&A, we are really use this QIP to build a war chest, and we run a programmatic M&A here at RateGain, and there are a bunch of opportunities we are evaluating, and I'm confident that something should materialize in the near future.
Hi, Bhanu. This is Anisha joining the conversation as well. I remember that you had revised your guidance upwards, both in terms of margin as well as revenue, because you're now talking about 65% overall growth, margins of around 19%. How confident are you of achieving that? And does it factor in an inorganic element as well?
Yeah, so as you are aware, our last quarter growth was about 88%. And when we came into the fiscal year, we'd guided for 55% with about a 17% margin. And we're exceeding on both levels. And if you actually look at our numbers for Q2, it's showing very, very robust top line growth as well as margin expansion. We closed at about 20%, so far exceeding our targets. So given the trajectory that we are seeing, and the H2 is usually better than H1 for us historically. So we feel very, very confident in upping this guidance from the 58% to over 65%. And, looking at the order book that we have, the overall deal momentum that we see, overall growth in our key customers, very, very confident of achieving this upward guidance as well.
Bhanu, but could what's happening in the Western Asian region impair demand in any sense? Because I think the last time we conversed, you were talking about having some impact of that Israel-Hamas conflict on your earnings and the conversations. Any more clarity?
Yeah, so I think in my Q2 update, the war situation in the Middle East was more of a caution. But explicitly, we had said that we're not seeing any impact, but we expected that, it could have an impact. But the good news is, so far, we haven't seen any impact. And given the truce now, I'm hopeful that this threat will sort of go away. But as I've stated in many of the previous conversations as well, we're actually seeing no letdown in overall, robustness in travel demand. And in particular about RateGain, we are generally growing faster than the industry. So I continue to see, given the deal momentum, given the volume growth that we see with our key customers, I continue to see upward trajectory.
Now, Martech as a segment has seen an increase in the contribution to your total revenue. What is the outlook? And for the different segments as well, can you walk us through your outlook?
Yeah, so we don't disclose margins at each business level, but as you stated correctly, what we've done is really built now a holistic MarTech solution with the acquisition of Adara. So we're now able to go to our customers and say, we're your end-to-end digital marketing shop, and we can dial up and down on various channels. And with Adara, we talked about how we have an overlap of customers with RateGain, and we were able to really go and reactivate a lot of those discussions post-COVID, which had been lost, and that's really led to a significant growth in the Adara business, thus the overall MarTech business for RateGain.
And analysts are expecting the combined contribution then of DaaS as well as MarTech that will exceed 75% of your total revenue starting FY24. Is that actually possible? Walk us through your product mix.
Yeah, so currently we're at like about 40%, like you said, 42% in MarTech, about 31% in DaaS, and the balance in distribution. So, I continue to see a similar trend play out in the next fiscal year, unless there is an acquisition that we do let's say in a distribution area that could change the mix, but organically we'll continue to see a similar mix going forward as well.
What about Shopify for the travel and the hospitality world? Because that was one of your dreams as well. Is it turning into reality soon?
Yeah, so I think we're showing good growth, and we are well on our way to realize that vision. But I believe we're still a very, very small company. Travel and tourism is almost a $2.7 trillion economy, and if you look at the tech spend in the industry, it's close to about $100 billion. And if you look at our company, we are now almost at 1,000 crore run rate. So it's still very, very small given the large size of the industry. So, our vision, as I've stated earlier as well, is to double the revenues in the near term, which is in the next sort of 3 years. And in 10 years, we'd like to achieve at least $1 billion in revenues. So when we get closer to $1 billion is when I can say that we are realizing that vision, because we're still starting out.
All right, good to have you on board. You sound very confident, upping your guidance, also talking about inorganic growth plans and hopefully some sort of M&A emerging soon. That's the view coming in from the management of RateGain. The stock is a little bit tempered then into the session. We'll take a